23 of the OCC's 40 new bank charter bids include digital assets. More than half of the recent applications for new national bank charters at the Office of the Comptroller of the Currency involve digital assets. According to Crypto Slate, 23 of the OCC's 40 recent de novo charter applications, or 57.5%, build crypto services into the proposed bank. The figure marks how far the federal banking pipeline has shifted toward crypto since regulators reopened the door to these applications. A de novo charter is a request to create a brand new national bank from scratch, rather than acquiring an existing one. These applications are slow, capital-intensive, and heavily scrutinized, which is exactly why the concentration matters. Firms are not simply seeking a state money transmitter license or a partnership with an existing bank. They are asking the primary federal banking regulator to let them operate inside the national banking system. The charters are real, the bank label is not. The catch sits in what these charters actually permit. A parallel report from Crypto Slate on the same day notes that a federally chartered crypto firm like Circle holds a national trust charter, not a full-service banking license. That distinction changes everything a customer might assume. Circle's charter does not come with ordinary checking accounts. It does not take retail deposits in the traditional sense, and it does not lend against those deposits the way a commercial bank does. Most of the 23 applications fall into this same category. Trust charters and limited-purpose national banks built to custody assets, issue stablecoins, or settle payments, not to run a deposit and lending balance sheet. Calling them crypto banks is convenient shorthand, but it oversells what they do. The value is regulatory standing and direct federal oversight, not the retail banking menu the word bank implies. That gap is worth holding on to because it shapes the risk. A trust charter holder that custodies stablecoin reserves is a different counterparty than a bank insured by the FDIC. Deposit insurance, the backstop that makes a savings account feel safe, generally does not attach to these entities in the same way. Reading a charter as a full guarantee would be a mistake. From enforcement to invitation, the volume of applications reflects a policy reversal, rather than sudden private sector courage. For years, crypto firms described a de facto blockade on banking access. The campaign critics called Operation Choke Point 2.0, which the current administration has since declared over. The SEC's shift away from regulation by enforcement has run alongside a friendlier posture at the OCC, which now treats a crypto charter application as a routine filing rather than a fight. The result is a queue. 40 de novo applications is a heavy pipeline for the OCC by any recent measure, and the fact that 23 lean on digital assets tells you where the new entrants see opportunity. Stablecoin issuance, tokenized settlement, and institutional custody are the services that most reward a federal charter because they need the credibility and the direct account access that only a chartered entity can offer. The stablecoin and payments angle. The push connects directly to the rails behind crypto payments. A federally chartered issuer can hold reserves and move dollars with fewer intermediaries, which is the same infrastructure that clears when someone spends a stablecoin-funded card at a checkout. Card programs today lean on a patchwork of banking partners and state licenses to move between crypto and fiat. A wave of chartered issuers could shorten that chain and put more of the settlement stack under one regulated roof. That is the upside for anyone building payment products. It does not remove the fee layers a spender actually pays. Network spreads, conversion costs at the point of sale, and issuer margins live above the settlement rail, and a bank charter does nothing to compress them on its own. What a charter changes is who is allowed to run the plumbing and how directly regulators can see inside it. For now, the applications are exactly that, applications. The OCC has not approved all 23, and a de novo charter can sit in review for a year or longer. The signal is directional. A federal banking system that once kept crypto at arm's length is now processing more crypto charter bids than traditional ones, and the firms filing them are betting that a limited national charter beats the state-by-state patchwork they have relied on so far.